Hello and welcome. I'm Adam with Pushing Envelope, the channel that gives you everything artificial intelligence and machine learning. Today is part 2 of our predicting the stock market using machine learning. Last video, we were able to put together a data set so that we can use linear regression in this video to predict what the stock price will be in the next day or the next few days. So if you did not tune into the first video, I'll go ahead and link it now. Go ahead and check that one out, get up to speed on where we are in the code, get your data set prepped, and we will go ahead and jump in right now to applying our machine learning model and predicting what the price will be and see if we can make some profit off of it. So without further ado, let's go ahead. Okay, over in the notebook, you can see I am right where we left off in the last video. We have our plot of the stock over time with some Bollinger Bands on here, some simple moving averages, MACD, RSI, and a whole bunch of other stuff that we calculated. Again, if you haven't seen the first video, you need to go ahead and hop over there to get to the point we're at right now with the data set. If you did, go ahead and run it and get your data set ready because we're going to jump right in right now. First thing we need to do is we're going to be using linear regression in order to predict the next point. So we need to import that. So from sklearn.linear_model, we are going to be importing linear regression. Okay, that gives us our model. Next, we need to get our data ready. So very first thing I'm going to do is I'm going to get our Y data ready. And I called my data frame history. So if you didn't, go ahead and use whatever you were using before. And so I'm going to say history at close. So ultimately, we're trying to predict the closing value in this data frame. Now we need the X values, which is going to be history, but we need to drop some columns from this first. So close, obviously, because that's what we're predicting, so we don't want that in the training set. But we also don't want the volume, because the volume is associated to the real close and not the previous day's close. So let's go ahead and drop both of those. So drop close and volume. One other thing that drop needs is whatever axis that we're dropping from. In this case, it's going to be equal to 1 because we were dropping a column. Okay, so this drops the column from the data frame, and the last thing we need to do is I'm going to do a dot values because I want a NumPy array instead of a pandas data frame. Okay, great, data is ready to go. One thing we need to do is, like always, split it into training and testing. Now, if you've seen my other videos, you've seen me use train test split, which does a 80-20 split or however much that you want, and it randomly samples your data and gives you testing points. I do not want to do that in this case for a very good reason. If you go up here, we are using time series data, right? So it is linked to a time, but anytime you have sequential data that's linked to an index or time like this one, you do not want to randomly sample your data, because if you think about it, if I just took random points out of here, it is very easy for me to go back and just interpolate those points and just fill in those gaps because I can see around it. What you want to do instead is you just want to cut off some point right here in time and then predict everything else in the future. And that way it's way harder. You don't have anything to go on to just look around it and plot in between. And it's going to make it harder for the model. It's going to be a better indicator of how your model is doing or how it will do in the future. So to do that, we just need to come up with some value that we want to stop our training data on and continue on with testing data. And we can call that numTest. So just the number of test points. I'm going to say 365. I just want the very last year. And then we can go from there. Okay. So we can do xtrain, which is going to be equal to x. And then it's going to be from 0 to -1 times num test. So from 0 to 365 from the end. And that will give us all of our X training data. If you copy that, we can do the same thing for Y. So Y train is going to be the same thing, but on the Y data set. And I'm just going to copy all of this again, bring it down, because we can do almost the same exact thing for the test. We go ahead and change these names to test. But instead of having it go from 0 to 365 from the end, I want to go from 365 to the end to the end. So I'm going to change this colon to be on the end of this instead of at the beginning. And that will give us our training and testing sweat. So let me go ahead and print the shapes of each of these just to make sure they're all the same shape and to make sure that the ratio of data is usable. Okay, as you can see, we have 3,200 training points and 365 test points. That's perfectly fine. So we will go ahead and roll on with that. Okay, we can define our model. So our model is going to be equal to linear regression. That's the module that we just imported from sklearn. As always, next thing, we can just fit the model to our data. So model.fit xtrain ytrain. Now that our model is trained, we can go ahead and make predictions with it. So preds is going to be equal to model.predict xtest. And that gives us our predicted values. The way I'm going to show you that is I'm actually just going to plot it. One thing I don't necessarily need to know, but I want to know is I don't know what ticker that we're actually using, what stock we're predicting, because what we did was we imported, if I go back up to the top, we imported the S&P 500 tickers, and then we just took the very first one. So I don't know what that ticker actually is, so I'm going to print that to the screen. So print ticker, and then I'm going to do a PLT. I'm going to do a figure just because I know I'm going to need to make this bigger. So fig size is going to be equal to 15 by 5. We're going to do a PLT.plot range length of y test. Y test is our real values, so go ahead and plot those. And I'm going to make these blue just so I know which ones they are. I'm going to copy this. I'm going to do the same exact thing, except for I'm going to do the predicted values. Those are called preds. And I'm going to make this red so we can distinguish them. Do a plt.show, and we should be good to go. Okay. As you can see, the predictions fit the data. There's some points like right here where it predicted way higher than the actual value. Other ones right here were predicted way lower. But overall, it kind of fits what the data is trying to do. Now, this is cool to see. It tells me absolutely nothing as far as is it actually working correctly. So one thing that would help me to know is if I were to actually use this model to make trades on the stock market, would it make me money? So we can go ahead and just put a simple test together to figure out if that is the case or not. So I'm going to delete all of that I just made, all of the printing out of the graph. I'm going to define a new function called testIt. And testIt is going to require some things. So I need to know what the opening price was. So I'm going to call that opens. I need to know what the real closing prices were. So closes. I need to know what the predicted closing prices were. In addition to that, I need to know how much money I want to start with in my account. So I'm going to call that start account, and I'm going to say $1,000. One more thing is I'm going to have a threshold value, and I'll get into that in a little bit when I actually use it to show you what that is. Okay, to start off, we can initialize our account. So our account is going to be equal to our starting account. So just say, okay, right off the bat, we have $1,000 in our account ready to use. And I want to just graph the changes to our account over time. So I'm going to make a list and just keep those values as I move forward. Okay, now we need to run through all of our predicted points and figure out if we were to make a bet or not, or make a trade or not. So for I in range length of predictions. So for each prediction, we're going to do something to it. Now, what do we want to do? Well, if the model is predicting that we're about to, that the closing price is about to be lower than the opening price, we should not be making that trade, right? So don't go ahead and buy that if you think we're going to lose money. Now, on the other hand, if you think it's positive, then go ahead and make that trade. But sometimes maybe you're only going to be making, or maybe the model's only predicting that we make half a penny or something. And maybe that's not worth it because it's too close to our negative numbers and it's not worth the risk. So that's where this threshold value comes in. And we can say like, If you predict that the stock is going to go up more than 1%, go ahead and make the trade. And if not, then don't worry about it. Just sit it out and wait until we're sure. So that's what we're going to do. We're going to use percent change, and then we're going to compare it to a threshold. So if the predicted value, so preds at I, minus the opening value, so opens at I, divided by opens at I, this is percent change formula. So if the percent change is greater than or equal to whatever threshold that we assign, in this case it's just going to be defaulted to 0 right now, which means if it's positive, go ahead and make it no matter how big or small that positive value is. Now we need to update our count to see how much we would have made. So our count is going to be equal to our count plus equals. So we're just going to be adding the percent change into our account. So the account times, again, we're going to be using percent change formula. So closes at I minus opens at I divided by the opens at I. Percent changes of the real closing value to the real opening value. And that's going to just update our count as we run through and make these trades to see if we made or lost money. Now, again, like I said, I wanted to just record these changes over time. So I'm just going to append a count to changes every single time something happens or doesn't happen. And just to keep it simple, I'm going to convert changes into a NumPy array just because they're easier to deal with, and everything else I'm using is a NumPy array. So go ahead and convert that to a NumPy array. All right, now I can do a plt.plot, and I'm just going to go ahead and plot those changes for each account change. So length of changes, I'm going to print however much the account was, and we can do a plt.show. Okay, this gives me a graph of my account over time. Other things that I would want to know is just how much is in my account and what was the percent change from the start to the end. Now, that's great. If I can go a step farther, it would be to say, well, if I didn't use this algorithm to trade and I just invested money right at the beginning and I took it out right at the end, what would my account be versus if I use this algorithm? And I can compare the two and see, is this algorithm worth using or not? So to do that, I can do an invest total, which is going to be equal to the start account, however much money I started with, plus the start account. Now's where we're going to do the percent change. So times, and our percent change for this one is going to be the closes at -1. So the very last closing value minus the very first opening value divided by the very first opening value. Division in there. Okay. Okay, this gives us our percent change, or our amount we would have gotten if we just invested it for a year and then pulled it back. Okay, let's go ahead and print each of those. First one we're going to do is the investing amount. So the investing total, and we are going to print that total that we just calculated. And now we also would want to know, okay, well, what was the percent change of that total that you have in your account now? We can calculate that using the percent change formula that we've been using this entire time. So that's going to be invest total. Let me put some parentheses in here. Okay, so invest total minus whatever we started with, so start account, divided by start account. And I'm going to multiply that by 100 to get it in percent form. Now, this could be a whole bunch of decimals, so one thing I want to do is I want to round it. And I'm going to round it to 1 decimal place. And then I want to make this a string because I want to add a percent sign after it. So I'm going to make this entire thing a string, and then I'm going to add a percent sign onto here. And looking back, I believe that's all of my parentheses, and that should be good for that line. Now, I'm going to copy that because I'm about to do the same exact thing for our algorithm. So I'm going to call this algo trading. And instead of the invest total, this is going to be equal to my count. And instead of invest total here, it's going to be, again, equal to the account minus the starting account over the starting account. And we should be good to go. So if I go down here, I can call the test it function. Now, if I remember up here, it needs the original opening values. Now, in our data frame, that is our very first column here. So if I say it should be an X, but X has all of these points, all of the data points stored instead of all the features in a single array. So I need to transpose the array. So x.t, I'm going to take the very first column. Okay, so that is the opening values. The closing values I actually know because they're the y test values. Now I need the predictive values, so preds. I'm sorry, I actually need to go over here. So this is not x.t, it's actually x_test.t because I'm only doing the test values. Make sure you add that in there. Okay, so that's my opening, closing, predicted values. I'm going to say keep that $1,000 in the account, and for now, my threshold is going to be equal to 0. And let's run this. Okay, you can see my account over time lost a decent amount of money. So if I were to invest, I would have actually lost 11% anyways, but my algorithm actually lost 17%. Now, we can adjust that threshold. And what the threshold is going to do, hopefully, is it's going to make your profile less risky. So it's going to say only when you are sure are you going to make that bet. If you're not sure, don't make the bet. We'll just sit on the money. But you're also potentially losing out on some gains. So you may not see as much of a profit, but you may not lose as much money either. So let's go ahead and make this, if it's greater than a 0.5% increase, make the bet. Now, it didn't even make a bet for this one, so this may not be the best one to make a bet on. So let's actually, for now, this is only for one ticker. If I want to do every single ticker in the S&P 500 on this, I can go ahead and do that by just copying everything I did here and then going back up to the top. So let's do that. Let me go ahead and copy the function and the module back up to the top. I'm going to put it right above all the other functions that we made. Go scrolling back down. Now I need all of this model stuff. Copy that. And we're going to come back up to the top. Okay, so I no longer want to plot all of the graphs, and I don't want to display the history anymore. Okay, so right after this point, we replaced all of the not in numbers. We got rid of all the rows without numbers, and then we were set. So I'm going to paste all of our test data right here. And this is where we're going to split up our data, train the model, and then we are going to test it. Now what I can do is, instead of just doing the first ticker, maybe I want to do the first 10 tickers. And if you didn't catch it, I'm using a threshold of 0 at the moment. And so you can see, okay, we lost 17% there, we lost 10% there. We're actually up 15% there, which is more than just investing, up 6, up 20, which is way more, up 7, down 29, up 6. So it's kind of all over the place. Let's go ahead and you see, I didn't see the end results there. Yeah, there's a couple of good ones. Let's go ahead and adjust that threshold. So I want to know maybe 0.05. So 0.5% or more, go ahead and make the trade. A lot of these are looking like never made a trade, because if you remember, this one was down 11, so maybe there weren't times to make a trade. Maybe this one just wasn't confident in any of them. Okay, so we made 6% here, close to the investing amount. We only made 2% here, but we still made money, I guess. Made 19 here, made a lot of money. Made 1%, not close to the 33% we could have. Down 14, which is more than before. And then we didn't make a trade here. Down 13. So it's kind of still all over the place. I mean, we can still keep adjusting the threshold numbers and see if it becomes less risky or if we made less mistakes. But overall, I mean, I wasn't expecting this model to right off the bat give us results. This is just an introductory how you can use machine learning to predict the stock market. I'm not saying this is the way to do it. Now, you can expand on this model, add in other indicators. In the next set of videos that I'm going to be doing within this same series, we're going to be looking at, okay, I don't want to know just one stock. I want to be able to look at all the stocks in S&P 500 and say, during this year or quarter or whatever period that you want to use, I want to invest in these 3 stocks. So we're going to be using fundamental data from some of their financial documents, and we're going to be creating our own indicators. And that's maybe something you can incorporate in here as well. Or you can just come up with different indicators. There's a whole bunch out there. So go ahead and Google a whole bunch of stock indicators, see what you can come up with, see what works best for you, and then then put it into here and see, is it worth it? Is it making you more money or not? Now, I'm not suggesting that you go to the stock market and you start investing with your model. You better have some pretty good confidence. Maybe do paper trading first if you really want to do that. I'm not a financial advisor, so I'm not telling you to do this, but it's something fun you can do. There's a bunch of stock data out there, and there's a bunch of statistics and things that you can pull out of it. So for now, this is as far as we're going to go with this model. Again, we're going to be continuing on looking at not only what one stock is going to do, but what are all the stocks in the S&P 500 going to do, and which ones should I be looking at to invest. So stay tuned for that. Subscribe to the channel to get that notification when those come in. Again, if you got anything out of this, please like it. Let me know so I know to keep making videos like this. But for now, that's all I have, and I'll see you in the next video.